Welcome to ETHDam, to ETHDam, to ETHDam, to ETHDam, to ETHDam.
Hello.
Hey everybody, so I'm Will. I'm Ecosystem Growth Manager here at Oasis. A high-level overview, Oasis is the first confidential EVM, and I think currently still the only confidential EVM. That means that we have the ability to support confidential smart contracts with encrypted smart contract state. And we have a really cool use case out of the research coming out of Cornell called Liquefaction, and we'll get into that today. But first, I'd like to have both of our panelists introduce themselves. Danny.
Yeah. Hello, I'm Dani Vilardell. I'm from Barcelona, first year PhD student at Cornell Tech. I have some background research on theoretical zero-knowledge proofs, but I now moved more towards blockchain interoperability and privacy, and that's what I'm here to talk about.
Yeah, my name is Rico. I'm founder of Semi-Liquid. We are unlocking liquidity for unvested token value, and we are leveraging the research of liquefaction of Cornell Tech to do that.
Awesome. Great to have you guys here. I guess my first question is for you, Danny. What, sparked the interest in liquefaction and the research coming out of Cornell?
Yeah, that's a great question. It was actually a blog post by Phil Dayan. Some of you may know him. He's the founder of Flashbots. He worked in our team in 2018, and he published a blog post called Dark DAOs. It was basically a protocol that allowed people to sell DAO votes privately. And we kind of saw this had further potential last year and digged further into it. And we found that this had many other applications than just selling votes privately. We kind of found that liquefaction broke one of the assumptions that underlay many blockchain protocols, which we call the single entity address ownership assumption, which basically says that each address is owned by a single entity. Some blockchain protocols that make this assumption are, for instance, the DAO tokens. They assume that the person that holds the token is the person that's actually voting, but also soulbound tokens make that assumption. Locked tokens, like he'll later explain, make that assumption that if someone has the locked token, he won't be able to trade it. We show in our paper that we published last December that that's not the case. We break many of the constructions, but we also propose some constructive use cases. And yeah, I'll later go dig into it.
Yeah, and just to, I guess, for the audience and for everyone listening at home, can you just explain like what, at a high level, liquefaction is doing to achieve these, groundbreaking new use cases?
Yeah, so the idea is quite simple. We basically create and hide the private key that controls the account in a trusted execution environment. So the private key is never leaked. It's always hidden. No one knows the private key. And then we define logic on top of that private key via smart contracts. That's done inside Oasis because Oasis does not only offer the privacy coming from confidential compute, but also the liveness coming from a blockchain, which are two things very important for our protocol. And that allows basically to, for instance, define the logic you need to sell the votes. How you would do it is, imagine I have some votes, some DAO tokens in my personal account, and I want to start renting them. I would create an encumbered account, which is an account that has the private key inside the TE, send my tokens to that encumbered account, and then define the DAO selling logic on top of that account via smart contracts.
Awesome. Thank you for the explanation, Danny. Yeah, we're really excited at Oasis for all the use cases that this opens up, which brings me to you, Rico. You guys are unlocking vested tokens and creating new OTC markets for them. My question for you is, their paper only came out in December of 2024, so you guys have already, and you guys started building in like March. So how did you, find the research paper and start building, and were you already thinking about vesting tokens and things of that nature?
Yeah, that's a great question as well. I think that it all began like 3-4 years ago when I already came across the idea of vesting in general, right? And what value is essentially locked away at any fundraising effort. So I already saw that there was huge potential, but back then the technology was not mature enough. Meaning you had liquidity fragmentation if you do multiple venues, right? You have public visibility, right? When you have the trade happen on chain. For example, if you are an A16Z and you have bought 55 million in locked layer 0 tokens, but you turn around and sell those, that's not something that the public markets would be fond of, right? So there are all kind of different things that were lacking back then. So I just forgot about it back then. But then I was following IC3 on LinkedIn, and I was subscribed to the newsletter. So when it came in, it immediately clicked, right? So we set up a call with James, one of the authors of Liquefaction as well, and it started out from there.
Awesome. Yeah, I think it's probably one of the more exciting use cases, although all the use cases stated in the paper are quite exciting. I guess to that degree, can you guys both explain what you guys have built? You guys have both started development on Liquefaction. So we're moving fast here. The research only came out, and we're already building. So you have a demo that you built. Can you just go into that a bit?
Yeah, it's actually came live yesterday. We call the demo "Take My Ape." Thank you. We kind of built that demo to showcase the power of liquefaction, so people can kind of grasp this more theoretical concept and kind of play around with it. Do you all know what a Bored Ape is? Do you want to own a Bored Ape for less than $1? So that's kind of what we are doing. We build a system where it allows you to create an encumbered account that has some small restrictions. This restriction is that it does not allow you to transfer the ape, but you can do everything else. So once you create the encumbered account, you're allowed to kind of receive the ape from us and play around with it. You can log into websites that require you to have apes, for instance. You can sign messages saying you own the ape, and on Etherscan it will show that you actually own the ape with this account. So from a viewpoint of Etherscan or from Ethereum side, you will believe that the person owns the ape, but the thing that you don't know is that that person cannot transfer the ape out of this account. So you can kind of check that demo out. I'm gonna make a live demo tomorrow in the studio up there, but it's called takemyape.com, and yeah, you can own the ape for 15 minutes. Then it can probably be stolen by someone else and jump around like from person to person.
Yeah, it's a really cool demo. I recommend everyone check it out. We'll share some details on our Twitter, and I'm sure IC3 will as well. So great work, Danny, and I hope everyone enjoys it as much as I did. Rico, what are you guys building? I know you touched on it a bit, but how are you using Liquefaction?
Yeah, so we use Liquefaction kind of like, a little differently. I would say we use it kind of like a TE-based clearinghouse of some sorts. So what we do is from your custodial setup, where most of the unvested tokens reside currently, you can pre-authorize to send those tokens at the unlock date, so when they become transferable, to the liquefaction address. And if the liquefaction address has that confirmation, then we can issue something that's called collateralized liquidity instruments, right? It's an ERC20 token, one-to-one basis to the unvested position. Think staked ETH, but for locked tokens, right? Which can be freely traded on the exchange that we have built, and later on can also be used as collateral for lending.
Yeah, absolutely. I think it's an amazing idea. It's sort of, and you came up with this when we talked. It's sort of like a forward-looking contract, OTC derivative, where it's not exactly priced the same as like the current token, but it can be looked at as sort of a future option or something along those lines.
Yeah, if I can touch upon that, I think that's kind of like striking, right? So if you have the traditional legal forward contracts where you're alluding to, those are essentially a one-time sale, right? So I am signing a contract that I'm going to deliver the tokens at a future date to you. You are giving me cash now, right? But you're opening up yourself to a lot of counterparty risk, and it's not tradable. It's only being sold, right? So now with the CLI as kind of like the analog to one unvested token, you can start selling them the one day and buying it back the other day, or someone else can do it, and you can create liquid markets of this new institutional instrument, right? So that's, I think, one of the main things that is quite different, but you can call it exchange tradable, self-settling forward or something.
Yeah, it's extremely cool. It's more efficient than traditional markets, which is always nice when we create unique value propositions that are better than traditional markets. My next question is for you, Danny. I guess, can you maybe explain a bit of like why the confidential EVM is needed, and why this is not possible on other EVM networks or even non-EVM networks?
Yeah, that's a great question. Well, liquefaction, basically the basis of liquefaction is having like key encumbrance, what we call, which is hiding private keys inside TEs. And that allows you to later define logic on top of that private key. So we do need at least a TE. Why we need Oasis specifically? Because what ensures us that the TE won't be shut off by the person that owns it. So we want both the privacy that comes from TEs for hiding the private key, and then the liveness coming from the blockchain. If we used a normal blockchain for that and kind of created the private keys plain in the open, and we later sent a Bored Ape to that address, anyone could just get the private key and send the Bored Ape to their own account. So we would be losing the Bored Ape.
Very cool. And yeah, we at Oasis really love that this use case obviously is unique to us. But I think it's really potentially a next pivotal technology in Web3. Ari is pretty famous. Originally the proof of work author, but also pushing oracles, pushing MEV, and hopefully liquefaction becomes as popular as all of those technologies have been. One more question for you, Danny. This is obviously like a novel or emerging technology, or I guess method within crypto. What findings or difficulties have you had, and that you hadn't expected originally, but you sort of have learned along the way of building your demo?
Yeah. Well, the cool thing about liquefaction is how flexible it is. The basic idea of hiding the key and then adding kind of access control policies on top of it that allow you maybe to do something but not do something else kind of made us rethink the whole system from scratch and try to make it as modular as possible. We kind of achieved that, and we have now a pretty strong code base. It's not audited, but I think if audited, it would be really useful for anyone that wants to build on top of liquefaction. But yeah, I really encourage everyone to see what they can build on top. There's a paper, there's a big table on the paper that we propose different use cases for liquefaction. Some of my favorite ones are private auctions, which would allow, for instance, I don't know if you know Constitution DAO. They got outbid by a little just because their bid was public. People could kind of see what they were bidding. We can solve that with liquefaction. We also propose methods for dust mitigation. There's many, like Vitalik, for instance. Everyone knows Vitalik's account. Everyone can send tokens, NFTs, money to that account. And Vitalik needs a way to show that he did not want that money because maybe he could get in legal trouble because of that. So we show that liquefaction can be used to kind of show to stay compliant. In the future, I really hope that liquefaction, and I do hope and I do think that liquefaction is going to be adopted in many places. I think the biggest thing we are working on now, we started this project a couple of months ago with Don Song and Ari Jules, is basically trying to build layer 2 that does not need for any bridging via the use of liquefaction, and also is chain agnostic in the sense that it's not an L2 for a specific chain, it's for every chain, while no need to build bridges. This is a paper we are working on right now, and it's one of the coolest use cases for liquefaction. But I do think that there's going to be many things coming out from this.
That's very cool. So I guess Oasis will become an L2 for every chain soon. That's very exciting. Rico, so one of the things that you guys recently have done is a pilot. Can you maybe talk about what that pilot was and who some of you the partners were that were participated?
Yeah, that was quite a milestone. Actually, it was Wednesday, so not so long ago. So the pilot, what we wanted to accomplish there is to let venture capitalists, but also market makers and other buyers experience the power of creating a CLI right from custody and then trade those CLIs, right? So essentially get the impact of semi-liquid, right? So we had a couple of partners like Animoca was participating, we had GSR, Spartan, and some other big name firms.
Jump,
and
right?
Sorry?
Jump?
Yeah, Jump as well, yeah. That's also a good one. Yeah, and I think that what's so interesting to see is that, because first of all, and with liquefaction, right, it is a self-custodial model in the basis. So the idea was that, okay, we are going to create a liquefaction wallet, go to your foundation and say, hey, we are giving you this EVM address, because you can't see that it is a liquefaction address. And by doing so, I receive the unvested tokens there, and then I can create CLIs and can trade, right? But the idea that we have now with the custodians that are very willing to participate and get a share of this untapped market is that we have altered it as what I discussed before. So yeah, custodians are all over this, market makers are all over this, because it's a net new market from this dormant capital that we are opening up in an efficient way using liquefaction and collateralized liquidity instruments.
Yeah, and I think I really, one of the things that when we first talked that I didn't, think of, but you've done a great job with is targeting sort of the custodian solutions. Like that is, I think, the people who have the vested tokens right now. And I guess one of the challenges that you would have had if you hadn't done that is that you would have to have everyone opt in before they have the vested tokens, right? But by targeting custodian solutions, now as long as the custodians have them, the tokens, that means that you basically can create a liquefaction for any vested token that wants to participate, right?
Yeah, right. And I think that's something that was kind of like learned on this journey, right? Because what I said, we started out with self-custodial, but yeah, the unvested tokens are at custodians, right? So that was kind of like a problem because you can't move the unvested tokens. So that was kind of like where one of the problems occurred. But yeah, like what you're saying is that by integrating into the custodian, so where the unvested tokens are, and by not moving them, we are also mitigating any possibility of the foundation blocking it, right? Because what you see now is that if I want to sell it, if I want to sell ownership now of these tokens to someone, I need to get approval from the foundation. So what the CLI does, we are not changing ownership now, but we are transferring the economic rights to the tokens when they become unlocked, right? So there is no involvement of the foundation whatsoever needed because you're not doing anything at this moment in time. You're basically getting a prepayment and the delivery is at the date when you can transfer it, right? So that's the great thing about working with these guys.
Yeah, that's awesome. And like I said, it's something that I had not thought of, and I love the vision. I guess my follow-up question for you would be, what sort of impact do you think this can have in general for Web3? What's maybe the market size? What about the culture will change, do you think?
What we hope for will change is that we will stop with pushing projects that are immature to TG. Because what we see now is that people, investors, they need liquidity, right? So it's their job to get return on their investment for their LPs. So they are pushing these projects, and these projects will go to market without any product market fit or without any significant amount of revenue. And then they're being pushed, and then retail is getting dumped on, right? So what we would like to see using liquefaction and semi-liquid as kind of like the default private market, so to say, is that you have companies that will get liquidity or they raise from the private markets, and when they become profitable or they have significant product market fit, only then go to a centralized exchange, and basically more similar to how the IPO process works now, right? Because if you do an IPO, you are a mature company, you have done a lot, you have been vetted, but now what we see on centralized exchanges, it's mostly not vetted and mostly no product market fit. So yeah.
Yeah, absolutely. I think anyone who's been in crypto long enough has gotten burnt on a TGE or something like that. So that's, I think, welcome from the entire community if we can stop getting dumped on. So I guess my next question is for both of you guys. What challenges have you run into in working with such like a novel product? What do you think the biggest challenge to liquefaction adoption or your own product adoption will be?
Yeah, that's a great question. I think the way you think of Web3 security is different from classical security. And now when you add this kind of privacy layer, you kind of add an extra step to that, where you don't only have to think, how do I make it so they cannot steal the Bored Ape from me? You have to also think, how do I make it so that no one knows who owns the Bored Ape? Or there's many things that come from like TE security research that you kind of have to adopt into your development that we had to learn. And I think that was really, really cool, really interesting. I'm sure in 5, in 3, in 7 years, that's going to be easier from the developer standpoint, and they are not going to have to worry about how they kind of use the mappings in Solidity to kind of not leak information. But that was pretty cool.
Yeah, I think it'll be similar to smart contracts in general when they first came out, right? Like there was so many. For example, Ari and his work with oracles, people didn't understand why oracles were important. They could use centralized ones, and then every other DEX or net lending protocol was exploited that didn't use them. I think similar with liquefaction, there'll be some pain probably, but we will get there where it becomes ubiquitous in the industry. For you, Rico, same question. Either on the business end or the technical end, what have been the biggest challenges you've run into?
Yeah, so on the business end, what we have seen in terms of pitching that, okay, we want to unlock liquidity for unvested tokens, one of the first signals or one of the first reactions is, it's not possible, right? Because the project before us, they didn't have liquefaction. So what they did, they were more functioning like a bulletin board, so to say, right? So they were saying, okay, give me your investor position or give me your private key and I'm going to sell that for you, right? Highly inefficient, expensive, no real price discovery. So it functions like a bulletin board. And so I need to explain it in a way that, you're not selling, but you are making it tradable. EA bulletin boards versus the NASDAQ, so to say, right? So it's kind of like an analogy, and I'm really trying to find the right analogy that click with different crowds. So for devs, you need to use different ideas, different analogies than for custodians or for VCs. But yeah, that's kind of like have been a challenge to really get them to understand that this time it is different, right? And it's, like that.
Yeah, I imagine that, explaining new technology to VCs who are normally technical, but not necessarily, especially with such an abstract idea. And that's why it's great what Danny's doing with Take My Ape is it really helps people, understand what's possible. And it's like, maybe not a physical product, but it's tangible, right? It's not so abstract. So I think that's why also your pilot was a great idea, that you showed them in real time. It's not only possible, it's extremely efficient. So I guess my next question is, what other use cases for liquefaction would you like to be seen or like to be built over the next 3 to 5 years that you think are valuable? Maybe ones that you will add to semi-liquid in the future.
I think that, for example, where a lot of these VCs are interested in and traders, they look at options. So, for example, you could have on-chain options and then not cash settled, but settled in the in kind, essentially, in the native token. EA, you can bet on if the layer 0 token is less than it is at unlock or of now at unlock or higher, right? So it's kind of like a bet that you make. That's an option. You can write options and you can take on that bet. And when you are at an unlock date, then basically you get the price discovery. And when you have the price, then the option is settled or not if the price is not correct, right? So kind of like such ideas really interesting to think about. Or indexing, right? Where you could have a token, or a token. I think it's the best thing, where you have the top 10, top 15 CLIs, right? And that token could be accessible on the public markets, right? So you can get exposure to quote unquote crypto's private market without needing to access semi-liquid yourself.
Right, yeah, and I think that's actually really great for the retail investor, right? We already seen Coinbase do like their top 100 token index and stuff like that, so that'd be really cool to see in the future. I know you sort of spoke already, Danny, on the ones that you liked, but are there any others that you wanted to mention that you think will be useful for the industry or just exciting in general?
Yeah, I think there was a great talk about privacy pools before. Liquefaction actually enables a really elegant and simple construction for legal compliant privacy pools that allow you to kind of prove that you're not part of a set of addresses that withdrew or introduced assets to the pool. So that one would be pretty cool to see. But I think the thing that needs the most kind of work from kind of a public good standpoint is a really strong set of modularized components for liquefaction, so people can implement what we call access policies on top of in a really easy way.
Yeah, I agree, and I think that also speaks to the fact that you guys went modular. I think modular is a word we love in blockchain. It means that we can build quickly. So I can't wait to see some of these things built out. So I guess one of my last questions is, what is next for your projects? So Rico, maybe like what's going on in the next year, or what are the next steps now that your pilot is completed?
Yeah, so in the near term, we are doing a fundraise where we have to be speaking with the pilot participants, and the appetite is real. So we're hoping to close the seed round by July, so before the summer. And then the next steps are integrating more tightly into the custodians. So you could also issue CLIs to a custodial wallet instead of issuing the CLI to a MetaMask wallet. Increasing the capacity on the order book, improving the order book access for API to the market makers. And the other side is the buy side, right? So we're working with L2s to make CLIs also tradable from TradFi terminals. And if we can get all of the stakeholders aligned, become the default private market for crypto, so to say.
Awesome! I can't wait. I can't wait till these starts going into production more. Seeing your pilot just had me excited for the future, and I can't wait until it goes live. Danny, I know you've already talked a little bit about what your next research project is, but maybe you want to elaborate a little bit more on that. You talk about it as a bridge, but it also like enables smart contracts on chains that don't have smart contracts. Maybe you can elaborate on that aspect.
Yeah, that's a good point. It actually in the paper we mention it as a use case. We just has like a small paragraph. We call it overlay smart contracts. It basically allows you to kind of use addresses on any blockchain, even blockchains that don't have smart contracts like Bitcoin or XRP, and like then use those addresses and add logic on top of it in the Oasis layer, and use them as smart contracts. So you can basically add smart contract behavior on top of non-smart contract ledgers. What we found out after publishing the paper is that it's even more powerful than that if you add some kind of extra logic on top of it, which allows you not only to kind of have smart contract behavior, which would be similar to a classic L2, but also use the utility that token provides in set chain. For instance, if you have an NFT that allows you to log into a website, you can use that NFT to log into a website even when kind of trading it in Oasis. Or if you're using some tokens to vote on a DAO in XRP, you can still vote on the DAO or sell your votes in Oasis, and it does not lose its properties. And we kind of dug more into that, and we are now kind of generalizing this idea and showing that you can use any token on any blockchain as if it was on Oasis, which is kind of the end goal. We want to showcase that it's basically a blockchain of blockchains.
Yeah, we love that, and we love all the value propositions and ideas you're coming up with. I'm really excited. I think Liquefaction is potentially like one of the most interesting use cases for Oasis, that we've come across. We are running low on time. I did want to ask the audience if there's anyone who wants to ask maybe a question.
I think there's questions here.
Oh, okay. Which one? Does owning the ape show that you have that amount of money in your account? Or you have that token, I guess.
Yeah, it does. You create the encumbered account, and then on Etherscan it shows that encumbered account owns the ape, and you can sign messages with it. The only thing you cannot sign is a transaction transferring the ape, but if you wanted to kind of post a tweet with a signature showing I own this account and this is my Twitter handle, you would be able to do that.
Awesome. Maybe just last, where can people follow you guys if they want to know more about the raise and we're going live, or they want to know what the latest research coming out of Cornell is? Yeah,
Ari Jules posts everything on LinkedIn and Twitter, Blue Sky. I know Oasis is going to also post something about that. There's going to be some news article coming out on the Take My Ape demo pretty soon. And I work for a lab called IC3, which is led also by Ari Jules, and there we post all our research.
Enrico?
We only have the website live now because we are in stealth, semi-stealth. So yeah, I think after July, after we have done the seed round, we will come out of stealth, and then we will just be visible on all socials. The website is semiliquid.com.
Yeah, and we will be always posting everything going on with both the projects on our Oasis Twitter and our Oasis Discord and Telegram, so you can follow Oasis as well. I want to thank you guys. It's been a great panel. And for anyone who asked a question that we didn't get to, I'm sorry. You come find us at the booth or come find us after this talk, and we can answer your questions. Thanks, everybody.
Thank you.
Yes.